welcome viewers to the massive open online course on the paper Money and Financial Markets. And today we shall be discussing on the module 13, namely Financial Innovations. With the advent of the economic reforms of 1991 in Indian context, the policies of liberalization, privatization and globalization have been adopted. And this was accompanied by a series of structural reforms, particularly in the banking and the financial sector. And within the financial sector, there had been more and more developments in the capital market. Capital market comprises of financial institutions, financial intermediaries, and also the banks and the other institutions. So thereby, the securities and the financial institutions have taken up a very prominent place in the structural reforms, where diversification of the financial markets have come up, and this diversification leads to the diversification of the financial assets and the instruments. And thereby the institutions have come up within a broad shape to participate in the market-oriented framework and in an outward-oriented strategy. So hence, the literature on financial innovation wants to capture the concept of financial instruments and the assets so that an indexation can be done. This calls for the definition of the financial innovations. As we know by the word innovate, to introduce or as if something new is coming up. And that is the literal dictionary meaning of the word innovate. Together with the word innovate, economists and other policymakers have stressed on the term innovation, which means to describing a different type of shocks to the economy, where the shocks may be good or bad, but innovation has a positive attitude in it. And in this context, the term financial innovation comes in place. So by financial innovation, we mean something to activate, something to create and popularize the financial instruments so that it can go at par with the technologies, institutions, and the market. So financial innovations have come up in a very prominent place in the entire forum of financial markets or financial innovations. So now we go back to the types of the financial innovations, because any innovation can be product innovation or a process innovation. So similarly, in this case, product innovation means any kind of new derivatives coming up, which is derived from the existing bonds or the securities or the mutual funds, any kind of corporate securities coming up, or any kind of mutual investments. These are all comes under the issue of product innovations. Process innovations refer to the process of production, that is the production style and the technology. This goes into the distribution of the securities, how the transactions needs to be implemented, where the digital technology comes in place, and thereafter the pricing of the innovations. So this calls for some kind of examples, like we have the GPay account, we have the PayPal account. All this comes under the concept of fintech, which is going with the product and the process innovations. So thereby we open up with some questions like, what are financial innovations? Definitely the variety of the financial instruments that are needed to be activated, popularized, and also they should go at par with the technological advancements. When we refer to the types of the financial innovations, we have the question, what are the types of the financial innovations? We have the product innovation and the process innovation. Product innovation is on the final product type, its packaging, its texture, and also its service or delivery. And process innovation is in the mode of the production style, particularly the derivatives or any kind of technological interventions or any kind of pricing strategies that are adopted. Looking into the concept of the financial innovations, now we move on to the need for these innovations. Why there is a requirement to have a special focus on the word financial innovations within the purview of financial markets. Basically, when we go by the government interventions, whether it's taxes or any kind of monitoring or surveillance or any kind of regulation or any sort of transaction cost, then definitely they are occurring in a market where the market is absolutely imperfect. Imperfect means that there is lack of information in it, or there is a lack of coordination among all the members, because all the stakeholders of the society do not carry the same set of information. Information set differs, and this makes the market to be imperfect. And so government needs to regulate, needs to monitor, needs to interfere. This also makes some of the financial instruments obsolete because they needs to be adapted, they needs to be changeable, and also they have to go at par with the dynamic process of any economy or a nation. So thereby the need for financial innovations is realized whenever any kind of technological innovation takes place or any kind of modern equipments come up. This calls for the development of the capital market. When we come by the capital market, we go by different components like the private banks, like the mergers, the acquisitions, the foreign banks, and also the collaborations with the different securities market across the world, particularly for a globalized economy, whereby the new financial innovations must be in place. Then we go for the payment systems, which is absolutely dependent upon the digital platforms. And this calls for the digital technology, whereby the payment systems have come up. And finally, the concept of the fintech. So by fintech, what we mean? By fintech, we mean a company which makes the traditional financial services more accessible, takes care of the technological innovations like opening a bank account or deposits or any kind of banking transactions taking place on any kind of digital platforms. And thereafter also we go for a channel for innovative financial processes which can also meet the issues of financial inclusion, or which can also go for mobile banking, any kind of selling cryptocurrency or online crowdfunding. All these are essential elements of a fintech firm or a fintech company. Now we go for the question related to the financial innovations or globalization. That what are the needs for financial globalization, or in other words, needs for financial innovations. First of all, definitely the government's intervention, because whenever the government comes up with any modern regulatory devices or environment, definitely technology comes a very important role, and so financial instruments needs to be upgraded or updated. Development of capital market is also important at the same place, which is very much dynamic in process, which goes at par with the global standards. Then we have the technology and the payment systems which must be in place with the digital platforms, and thereby the entire world is moving into it. And thereby the concept of fintech, which is a very, very modernized concept, but which actually rests on the traditional services, but to make it more accessible and make it more integrated with the global framework. So these are the needs for making financial innovations to be in place. Now we get into some of the functions of these financial innovations in this economy or in this world. First and foremost, the important function is to check the imperfections. Imperfections means lack of proper information set, whereby the discrimination, the exploitation, or sometimes it leads to a huge financial crisis. So because of the inherent market imperfections, which means market imperfections are already built within the system from the beginning, where there is actually having a buyer less information than a seller in any kind of monetary engagement, the market players are not able to move funds freely. That means free mobility of the funds and the resources are restricted because of the interventions of the middlemen or the intermediaries or any kind of distortions in the market, which can be across the time and the space. That means it can be done in a historical time basis, or it can be centered around a specific company for a particular period of time. So this is actually what asymmetric information deals with. So with the advent of the innovations, some streamlining can be done, some kind of rationalization can be done in terms of the laws or in terms of the rules. The next function refers to that innovations occur to answer innate agency concerns and information asymmetries. That means whenever we go for a contract between one company and the other with the introduction of digital technology or digital platforms, somewhere or the other, configuration of the interest of both the parties are taken care of. That means the mutual interest of the buyer or the seller, or in terms of investor or a lender, comes in place whenever a financial innovation contract is being signed, so that the managers can basically get hold of the private information, and information can be percolated to both the agents. There is no kind of asymmetric information or information lacking between the different agents in the market, which could have been possible without the introduction of financial innovations. So with the advent of technology, this comes in place. The third function says transaction reduction, search or marketing cost cutting takes place due to innovation. Because today the information does not carry any transaction cost. With the advent of the digital technology, with the advent of the IT revolution, information can be percolated at any corner of the world within a nanosecond. So thereby the transaction costs play a very important role for making the financial innovations to be more and more cost effective. And thereby the households can also participate in this transaction cost. Different stakeholders of the society can participate in these digital platforms, making it more accessible and also making it more and more economical in the long run. So with financial innovations, the cost of operations have come down or it has become more and more pocket friendly. The next function refers to that occurs whenever taxes, policy or there is any procedural change. So any change in the government procedures, any change in the government policies makes the financial innovations to be more perfect. For example, zero coupon bonds, which has been announced by the Federal Reserve Bank very recently, or euro-dollar euro bonds, or all this kind of equity-linked investment strategies. These are possible because of the government interventions in it. Thereby, the advent of the new financial instruments make it very clear to monetize asset holdings and thereby making it more and more economical and also to enjoy the capital gains. Because these capital gains can be delivered instantly and also it can be circulated to various accounts with the help of the digital platforms, which makes it at ease. And that is what people are working on, the ease of doing good business, where financial innovations play a very, very significant role. Then the most important policy which has already taken up in the world economy and definitely in India, globalization. So globalization of economy leading to higher risk in turn initiates innovation, because globalization also carries a huge element of international risk. So due to the cyber frauds or cyber crimes, this type of financial innovations makes a protective shield for the agents to participate, because the market volatility fluctuations can be on the rise without any control. So whenever the market is uncertain or whenever the market is volatile or unstable, financial innovations emerge as a very, very good mediator or as a protective shield to manage the risk or to cover up any kind of financial exposures, because it deals with digital as well as the interactions of the both parties at one hand. The next function goes into the sophisticated technology. Because with every day and with every changing world, it is dynamism of the world that makes adoption of sophisticated technologies. For example, IT, which has been making process in the financial transaction, making it more steady, more fast, and more importantly, more simplified. That is what they say, simplification or streamlining or rationalization of the procedures, which have been more and more accessible because of the IT interventions. And definitely the improvement of the telecommunication sector, more and more connections to internet broadband connectivities have facilitated these innovations to come in place. So when we go back to the question on highlighting on the functions of the financial innovations, so functions thereby come into checking the market imperfections, making the agencies to come up so that the agencies can have a transparency in their interactions, definitely the cost reduction, that is the transaction cost and the search and the marketing cost, the innovations whenever takes place because of any tax or a policy change. Globalization of an economy is a very, very important factor because it adds risk. So the risks can be checked with the advent of the innovations. And definitely the sophisticated technology which had been upgraded every day with the new algorithms, with artificial intelligence, all these are taken up by the advent of financial innovations. Now we move on to the major financial innovations as an examples. Firstly, we get into investment crowdfunding. Investment crowdfunding is basically one of the fallout of globalization in the financial markets, because it means of raising equity capital more and more democratic, which is in tune with the policy of disinvestment, where the stakeholders participate in the selling of the shares and also gaining the ownership of the shares. So this is making the equity capital to be raised across the international markets where the number of stakeholders rise and thereby the responsibility or the commitment of the stakeholders across the world is coming up. And thereby we have the Seed Invest and the Funders Club as the example of investment crowdfunding. This also takes care of the foreign direct investment or in some way foreign institutional investment to participate in the stakeholders process. The next important major financial innovation which has already been in place since the opening of the economy or any nation is remittances. Remittances is the area where the financial innovations are gradually transforming. This is because these are the funds which are enjoyed by the domestic nationals who are earning abroad and they are sending back their income to their country of origin, that is where the citizenship belongs to, either by wire mail or by SWIFT transfer or any kind of online transfer. So these transfers are very voluminous because across the world the volume of the remittances are always on the rise. And they are also economically significant because in most of the cases they stimulate the economic growth potentials. So remittances had been one of the most important fallout or manifestations of financial innovations over time. The third one, which has very much come in Indian economy as one of the major projects of the economic policy, which is mobile banking. So by mobile banking, we mean financial inclusion to make the financial sector to be more accessible to all corners of the society. This is also going with the JAM project of the government of India, like Jan Dhan Yojana, Aadhaar and mobile banking. So by mobile banking, we mean the major innovations where every individual can interact or can participate in the banking sector or in the banking market, and thereby making a secure connection and also making a good internet connectivity. This mobile banking also makes it very clear to make the issues to be confidential so that personal information is not being compromised, and so there are cyber laws and cyber security measures are being adopted. In Indian economy, mobile banking had come up as a prominent place to actually get into the major dynamic reforms in the financial sector, namely financial inclusion. The next important innovation has been market spanning. This is regarding the interest rate structure which has evolved in the early 80s. Because by interest rate, we mean the cost of borrowing from the investor's point of view and the rate of return from the lender's point of view. So whenever any kind of interest swaps have taken place, say after recession, the interest rate has been volatile. So where the default rate has come up after the Great Depression, but anyway, financial innovations want to streamline the interest rate to be at par with international standards so that the domestic interest rate and the international interest rate are actually in parity. This had been one of the major objectives of going for the market spanning, where the interest rate dynamics or the interest rate movements are monitored time to time. The next one is very important in terms of the mathematical algorithm, which goes by mathematical innovation. Like the option markets, the explosive growth that has come up in the Black-Scholes model in 1973, which means that the debt collaborations and the obligations have come to a market setback. Because of the stock market crash, there has been crash in the debt market, which has been the origin of the financial crisis in most of the times. So if this crisis can be predicted beforehand, if any kind of algorithm be designed so that the crisis can be estimated or can be forecasted, then these financial innovations come in place. So thereby the flash trading or any kind of Chicago Board of Options Exchange, all these are the modern innovations which can be used to predict any stock market crash in the near future so that the economy of the world can be prepared to tackle the problem. The next one is very important, is avoiding tax and regulations. Most of the times it is seen that the tax and regulations are creating a distortions in the market. So the Modigliani-Miller theorem says that taxes has a reason to prefer any kind of security over another. That means securities can act as a protective shield to overcome the imposition of any regulations, so that the investors and the corporates can operate in a free, liberal environment where the government monitoring is there, but government restrictions are not that stringent. So we have come up with the next question, which is highlight on the examples related to financial globalization. Like firstly, the investment crowdfunding, which takes care of raising equity shares; remittances, which is the flow of the returns or the income from the domestic nationals who are settled abroad; mobile banking, definitely going for linking up with the banking accounts with the technological platform, which has been one of the very, very successful missions of financial inclusion; spanning the market, taking care of regulating and monitoring the interest rate structure; mathematical innovations, particularly for predicting the crisis in the near future; and definitely taxes or regulations, sometimes they distort the market, but how can innovations come in place? Now we come up to the final section on future trends of financial innovations. That is where the world is moving ahead in terms of financial innovations. Basically, financial innovations wants to make the world to be more formalized, to be more structured, to be more regulated, and so this calls for a transparency in the financial activities or transactions. Secondly, the institutions which are led by US or European institutions need to look into the issues, particularly from the administrative framework, from the regulators framework. They are transparency, they are liquidity, and they are valuation, because all three are basically the pillars of governance or any kind of social infrastructural capital. Similarly, the designing of the governance policy needs to take up. The cyber policy is very important in this regard. Product designers should come up to various financial assets. How can the financial assets be more diversified? How can it capture the perceptions of the investors, which is one of the most important element of behavioral finance? And finally, financial e-commerce, which is very much today apt in the digital platforms, whether we go for online buying and selling of securities or physical goods or capital goods or whatever it is, e-commerce have come up a big place. So when we go back to the questions on the future trends, then we highlight on the points of transparency, on the points of liquidity, governance, definitely designing the products, making it more diversified, and typically stressing on the e-commerce. So in this particular module, when we sum up, we basically refer on the types and the concept of financial innovations, why financial innovation is a requirement, what are the respective functions of the financial innovations for any globalized economy, what can be the examples of the innovations, and what the world is moving to in the near future for a safe and a sustainable future in terms of the financial innovations. Thank you.